If you have a mortgage, there's a very good chance that you're being overcharged. We dug deeper and deeper and found that this system of overcharging is virtually universal. It runs across the entire mortgage lending industry. Most people strive to one day own their home, get out of debt, and prepare for their future. As if that isn't hard enough to do on your own, are you aware that studies show that 45% of homeowners have been overcharged more than $1,500 by their lender? Approximately 13% are due a refund of over $10,000. Although many consumers believe that their bank or non-bank lender would never make a mistake on their account. In June 2010, Bank of America agreed to pay $108 million to 200,000 countrywide borrowers. GMAC was required to refund overcharges of $100 million. Likewise, Fleet Mortgage refunded $150 million in client overcharges. As falling interest rates have pulled waves of homeowners into the refi game, an overburdened mortgage industry has been strafing them with costly errors. Unfortunately, even with today's technology, errors occur far too often with home loans. The Wall Street Journal, Money, Forbes, Newsweek, and other leading publications have been warning consumers about mortgage miscalculations for years. You should be especially concerned if your original lender sold the loan, is now out of business, or if the balance just seems too high. While many homeowners are unaware of these overcharges, mortgage audit services have helped uncover and retrieve hundreds of millions of dollars in overpayments and miscalculations for consumers. One of the country's leading experts on debt says, every person that has any type of home loan today should take advantage of a mortgage audit, if not just for their own peace of mind, but they can be owed a significant refund. This mortgage auditing system has helped homeowners discover refunds since 1985 and has been written about in publications such as USA Today, Wall Street Journal, and Forbes. What's even more staggering is when the Federal Housing Administration pioneered the long-term amortized loan in the United States almost a century ago. The loan was structured so that the consumer will pay back the bank double, if not sometimes triple, the amount they originally borrowed. For example, on a $200,000 mortgage at a 6% interest rate, over 30 years, you would pay back $431,677, more than double. Not only is this completely legal, but the banks have been benefiting from this system for almost 80 years. Now there is a way, using today's modern technology, to not only make sure mortgage errors never happen to you again, but pay off that mortgage years earlier without changing your current income. Across the nation, the ACT program has aided thousands of homeowners in reducing their mortgages and other debt by over $335 million. Never before has the technology existed to accomplish this. A technology that ensures that every penny you have is working mathematically the most effective way imaginable for your benefit, not the lender's. Homeowners that were on track to pay off their mortgages in 25 to 30 years are now on track to be completely debt-free in as little as 8 to 10 years. They didn't have to refinance their mortgage nor increase their current income. The ACT system takes homeowners by the hand, adjusts with their changing day-to-day life, and assists them in becoming completely debt-free years before their current debt schedule. The question is, what do you do now? The first step is to call the number provided at the end of this video to receive your analysis to determine your new payoff date, interest reduction, and potential mortgage refund. We believe this is something everyone should be entitled to. Call this number now for your interest reduction analysis and complete refund review.